evening. It is Friday, December 12th, 2025, and we'll be marking up the Ford Motor Company stock chart using the wick engulfing block method to find key levels. Generally, before I start this process, I'm only trying to go back, that seems decent. What's that? That crash of weight. So, we'll see how it goes. The way I do this wick engulfing block strategy is I'll find highs and lows, and I want to isolate the top 20% or less, ideally, wick bodies. And as I start, we'll go 3 month, December 12th, and this is a wick engulfing block method. So we'll be overlaying these. Generally, I want to look at groupings of about 5 candles on the 3 month, take the highest, and 20% of 5 is 1. So the highest one, I want to just take it to the top or bottom of the candle body, like that, right over here. And as we overlap, we'll start to get a picture of where key levels lay, and then we can check that with the volume profile indicator here, and using AI to ask for top key level recommendations over a certain course of time, and based on how many key levels we generate, we'll ask it for the same amount. So 1, 2, 3, 4, 5. And when there's crossover like this, like with wicks jumping down, sometimes I'll count those, especially if I'm finding gaps in where I think there should or could be key levels. Okay, let's zoom in a little bit. And these blocks, I draw them kind of roughly from where I'm engulfing them from. So here's another small, just so that I know where that line's being pulled from. I'm typically going for highs and lows. I'm actually always going for highs and lows. And once some stuff starts overlapping, the chart will start to clarify itself. So sometimes these little gaps that start forming, call them voids or gaps, and then you have the blocks. Typically I want 2 to 3 blocks overlapped to indicate a strong key level, but whenever there's really narrow voids or black gaps like this, often those end up being some kind of key level, and typically I'll take a 50% stance, unless the chart is a little slightly off, like skewed from the 50%, which is more typical for like a 61.8% offset. So maybe instead of 50% here, I'll go like 61% here, or I might go 38.2%. But that's all to be determined as we draw. Draw some more. 1, 2, 3, 4. Yes. So this level here, I would call it a level because it's now been overlapped at least twice. This small zone is definitely strongest, but let's keep going. Okay, top side. Some longer wicks. Okay. There's a nice key level. It's 1, 2, 3. So only 3 overlaps now. So that's a good strong one. From initial overlapping or engulfment. I'll make up some fake words. Could be a real word. This middle zone looks really good. And that's already kind of a 50% or so. Okay, just kind of. And now you can see we're backing up against 09, which is 14 years ago. So we definitely have some strong levels. Now we'll go to 1 month. See if there's any major gaps. Yep, in this area that would likely. So if it decides to bounce kind of off of this area, we've got some good key levels down here. But if we go higher, let's see. Take this. Kind of already isolated there. This is for 1 month now. And we'll change the color. Just get a little contrast. Looking pretty good. So that could modify, but there. Here, in the case of more extremes, again, that could be an offset. Pretty much the same. However, we'll take the next wick lower. Okay. Step up here, it's already all engulfed. That's pretty good. Okay, so now we're going to throw on our first key level. Send it down. This one. Key level. Okay, so now I'm on a Mac, so I'm going to use press and hold Command, click and drag, and I'm going to place these blocks at the points that we've talked about where we're kind of getting triple overlays. Oh, what the heck? It's not copying. And these key levels are just so important because, for me, whatever you do in trading, you need to develop a system that you can trust. Because once you can trust your work, then it's much easier to set and forget the trades. Because you know, hey, I've done some solid work. and things look generally okay. I know I can never get it right, but if it looks kind of solid, then we should be good. Okay, so that's going to be the key levels. So step 2 is we're going to go to the 2 week. Well, no, before we do that, yeah, let's go to the 2 weeks since it keeps everything kind of in there. Oops. Okay, so the first check, this goes back to 2020. The first check is the volume profile. It's a free indicator on TradingView. What I like to see typically is these like ridge lines, this whole ridge line. I want to see, if you're familiar with land nav, these are called saddles, but these dips, I want to see these dips lining up with my key levels typically. So maybe that's a better one. It kind of misses. This is fine. A lot of volume. You can see this is a crazy strong area, POC, for this indicator. This white line is included on the indicator, the thicker one. They're saying that's the average price point, and as you can see, price, at least on the 2 week chart, has been dancing along that. Finally broke down in summer last year, $2, and has recently been surging back up a little bit. So there's one in the dip. Not so much, not so much. Wow, this chart really, that's a good one. This chart really doesn't line up as nicely as a lot of others, but upon looking at some of the key levels, it actually seems fine when visually inspecting. And then for the AI portion, turn that off. We're going to count the key levels: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So typically I like to have 6 to 10 key levels. Otherwise I'll probably start trimming, start reassessing, moving a couple things around. But if there's less than 10 over a long period of time, I'm pretty happy with that. And then we will ask what are the strongest key levels for Ford F since 2009. So that's about what we went back to. Let's say in 50 hertz and in grid. So typically, you want to check two or three key levels up from current price and 2 or 3 key levels down from current price. So if we're currently standing at 1370, then that's right between these two. And I mean, this is kind of pitiful. It just doesn't move that much. Hopefully price movement on options is a bit more decent, or they're going to be longer kind of hold things. But anyways, 20 is 10, 15, and 20. This Ford's got a weird chart. So you got 10, you got like a double. 15 is kind of marked out, and then 21, and if you go to the bottom of this, 20. So those levels are very good, honestly. As this area, we're getting a little bit more ride. That kind of a gap down to this strength area. Yeah, this looks nice to me. So typically, guys, honestly, and girls, there's, like 10. But I'm afraid that I'll show strongest 10. So as you can see, it's just, small dollar increments all the way up, 1, 2, 3, dollar gaps, which isn't really helpful besides the fact that, you get $3 here, $2 here, $2 there. So, it's all looking relatively good, honestly. And again, I would love to use volume profile and AI to set my key levels, but I really enjoy knowing, trusting that my system is generating something quite close to whatever other sources say, so it's still my own work. Always do your own work, do your own research. But those two tools, volume profile and AI, really can take you a long way. Alright guys, I think it's probably been like 15, 20, 25 minutes. So I'll pause here, and on the next video, we'll open up the momentum reading tools, and we'll be reading those on the 2 week, 4 day, 2 day, and 8 hour. So you can see how I store all my information. This is my trading system. You can freeze and read it. And then this is my journal, which I've refined and refined and refined. So, alright. Thanks very much, and we'll be reading some momentum in the next one.